You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. Now, let's open the playbook and get started.
Wow, haven't heard that in quite some time, listeners. Yes, that music belongs to none other than the much beloved, much bemoaned, much missed Options Playbook Radio. But yeah, you're hearing it again, so maybe some fun stuff in store there for all you who've been waiting patiently with bated breath for the return of OPR. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you have been binging and mainlining pretty much ever since OPR went on hiatus out there. A lot of you have been making up with shows like Options Bootcamp, which is very much a sister show to OPR, and our network does a lot of educational stuff there as well. So glad to see so many of you are discovering. But you all want your little bit of a taste, your little bit of a flavor of OPR. So we're happy to bring it back for you here right now. And joining me on the old Options Playbook Radio program, because you're not tuning in for me, listeners. You're tuning in for the options guy himself, Mr. Brian Overby. Now, I guess, from optionsplaybook.com. Mr. Overby, welcome back to the show, sir. It has been far too long.
Oh, yes, it has, without a doubt. Oh, it's great to be back. And yeah, definitely love the sound of that music. Man, did I miss it. So, and I know we got some questions out there that are coming in. There's a lot to report on this topic, Options Playbook Radio in general. So I say let's huddle up and get her going, Mark.
It's time to huddle up and answer questions about your favorite options plays. Submit your questions via twitter.com/options, facebook.com/theoptionsinsider, or questions at theoptionsinsider.com.
All right, everybody, welcome to the Huddle, the portion of the show where Brian and I huddle up to tackle your listener questions. But Brian, there are some questions we've been getting for a while that I just can't answer. Which a lot of people have been writing in, like, what's up with OPR? Where's Options Playbook Radio? What's going on with the feed? What's going on with Brian? All of these, we've been fielding these endlessly ever since the show went away. So, Brian, let's start there, sir. The floor is yours. What's been going on with OPR? What's been going on with you? What is the status of the playbook? And what are your thoughts on the show going forward? It's a lot to deal with here at the start of the huddle.
All right. Well, I think this is the first. I may have hinted on some of the other podcasts that we have done, Mark. But as of let's say the beginning of October, I now own all the rights to the Options Playbook. So I worked with Ally to try to get those rights. Ally was wonderful throughout the entire transaction and allowed me to basically move on, take a step away from working for a brokerage firm in particular. And now I am the founding president of Options Playbook Incorporated, and we have launched a new site. We obviously had to remove all the mentions of Ally inside the site, and there's a lot more coming. But because of the fact that the trademarks were owned by Ally, and I had left Ally, we could no longer do Options Playbook Radio in general. We couldn't use that title. Obviously, we could do podcasts, but that particular name we could not use. So now I do have the rights. I do own the trademarks. We now can press on with Options Playbook Radio, and also it frees me up quite a bit. I no longer have my licenses being held by the brokerage firm, and so I can be a little bit more free in the way that I discuss option trading. And then on top of it, we got a lot of new things coming. There's going to be a lot of video that's going to be added to optionsplaybook.com. I'm actually looking to do a deal with a registered investment advisor to try to manage some money using option trading. Basically, the wheel approach is what we'd be looking at. And working with a lot of outside vendors just to build up the site and build up the education offerings that we'll have on optionsplaybook.com. And who knows, maybe we even write version 3 of the Options Playbook. That would be a little bit down the road, but I do have some ideas that I would like to add to the book. And man, so that's just a little bit on top of everything that's been going on without getting into the minutia, but very excited about everything. Very thankful for all my years with Ally and what used to be Trade King, and the fact that we were able to come to a conclusion as to how I can move forward and still be a part of Options Playbook, which has been so successful since it actually was written over 15 years ago.
So I guess you're no longer just the options guy. You're now the Options Playbook guy, sir. What do you think?
Right. Well, that is true, but and I still am trying to go with the options guy too. So I'm still working on that trademark to go along with all of this. So I have a lot going on just in general.
Keeping the lawyers busy, I see, which is always a good thing.
Yep, and my bank account busy too when you mention lawyers. So
I'm looking at optionsplaybook.com right now, listeners. You can see it for yourself. It's easy to find. Like I said, the URL is just optionsplaybook.com. Going to look similar to what you saw before. Obviously, some of the branding has been removed, but layout-wise, design-wise, color-wise, it is very similar. But as Brian alluded to, sounds like it's going to be getting some new coats of paint, some new updates, and some new tweaks going forward. So if you were hungry for Options Playbook content in the meantime, optionsplaybook.com, a place you could go. Speaking of content, Brian, we haven't really chatted with you officially on this show quite some time, certainly since all this recent madness unfolded in the markets here. So maybe let's just dial it forward a little bit, just to the last few weeks. I'm sure listeners out there want to know your thoughts on just this insane market we've seen, certainly since post-Powell, when it's just been 1-2% upside. It seems like a day every day for the last couple of weeks. So explosive rally, 400 handles or so to the upside in the S&P right now. What are your thoughts on all this madness we've been seeing out there in the market recently?
Madness is the answer. And actually, the last time that we did a podcast on Options Insider, talked a little bit about the markets being like at a pressure point, especially with the Russell 2000, let alone the S&P 500 index, that the market just really wanted to decide which way it was going to go. And I really think it was on the edge of the cliff. It either wanted to break down hard or break up hard. And we've had that strong move to the upside, which is a good thing. Everybody is now saying the soft landing is within the purview of my binoculars at this point in time. So we saw the 10-year obviously start coming down. We've seen the Fed Watch tool over at the CME changed dramatically about the probability of more Fed hikes going out into the new year. That probability has dropped quite a bit. There's even a scenario in March where they're saying I think it's now right around a 15% chance that we might actually see a cut in the Fed funds rate. And with that combined with the fact that we've seen the 10-year come off, and then we also had one huge landmine that a lot of people haven't been talking about. It's still out there. They've kicked the can down the road. But on the 17th, they were talking about, once again, another government shutdown. And we finally got a Speaker of the House. They were able to kick the can down the road. We're going to have this conversation once again. But one thing that really surprised me was this week started with the VIX index, right? Well, we had strong moves on the upside, which kind of helps things a little bit. So the marketplace was saying that they were thinking that the government would do something as far as passing a budget and not having a shutdown. The marketplace was believing in the U.S. government. I was not personally thinking that could happen, but they did. Now we're still going to have one more big date. Once again, they're still kicking the can down the road. They have no funding. And I'm not really sure how this is going to play out, but this most recent proposal does not include any additional aid for Israel or Ukraine. So not really sure how the market's going to take that as we see the geopolitical concerns play out up until, I think right now, it looks like January 19th. This bill would extend funding until about January 19th. So another big drop dead date that we're going to have. It'd really be nice to get that behind us, because that's the one thing that I think would really tip the scales on if we can pull off this soft landing or if we don't, if the Fed is actually going to be done raising interest rates and just policy in general. So it's awesome to see 4,500 in the S&P 500 index. I thought about wearing a hat today, but then I realized that it was a podcast, so it didn't really matter. But, the 4,500 level in the SPX, we just haven't seen it in quite some time. And it's just nice to be back to that range. I think there's a little bit more, the marketplace loves when you remove uncertainties. And there's a lot less uncertainties right now at this point in time. And want to give a big shout out to the consumer. This has been one huge week of earnings as far as the consumer is concerned. And if we have an MVP for this economy game, it would be the retail consumer. They're the ones that have kept things afloat. Real good numbers from Target, from Home Depot, still showing that going into the holiday season that we got a chance that it could be a strong holiday season. Numbers were great. Way better than I had expected coming out this week. But I knew this week was going to be a big week. So kind of targeting, looking at it, and the VIX was right this time. The VIX had it right this time around. When we were down in the doldrums, that was only about 3 weeks ago. We saw the VIX index, I thought, was once again on the lower level. But right now, seeing the VIX trading right around that 14 handle, I think that is good news. And yeah, I'm excited about applying some cash going into the next year. Honestly, going into the Christmas holiday and all of that. So I've actually started a portfolio of deep in the money call options that I'm going to follow throughout the year, and I'm going to try to share that with everybody on all my webinars and podcasts, and just adjust those positions and just say, I want to buy some very liquid underlying stocks that I can buy deep in the money options as substitutes for the stock. And then recently I have been selling a lot of calls against them, and I would continue to do that going into the new year. But we're limiting our risk on the downside because there are still quite a few landmines out there. And as opposed in this portfolio, as opposed to trying to add any stock, I'm just going to do it for the first time, only buying deep in the money options. So it's going to be a test case for me this year in 2024. So that was a lot. But yeah, besides that, starting a company and kicking off optionsplaybook.com and maybe writing another book.
I like it. I'm still fixated on the fact you have a S&P 4500 hat. I feel like I'm behind on the fashions. I need my S&P level hats. I need to go.
Yeah, that might be a little bit of a fib, but honestly, it'd probably sell. We should probably throw it up there on Amazon. The fact we hit it today, maybe we could get some buyers out there.
Let's cash in while the getting's good, sir. You put it up on Cafe Press. We'll put the link up on Twitter and YouTube. 1 day only sale, S&P 4500. Get it while the level holds. Let's get out to some of your questions out there. You folks are patient, and of course, if you've been sending them into OPR, we've been funneling them into other shows because we didn't know when you're going to get an answer. We don't want to keep you folks waiting here at the end of the day. You already tackled this first one here from LLTM, Brian. He just wants to know, what's up with the Options Playbook? You kind of just hit on it. We were talking right before the show. This is the show version. You mentioned the website version. You also mentioned perhaps a new version coming down the road, but folks can still get, the Kindle. Can they get the physical version as well? Can they get both versions, just Kindle right now?
No, it's just Kindle, and one of the biggest things about the hard copy, obviously, is that it mentions Ally. So there are no hard copies that are going to be quote unquote sold by Ally going forward. They do have some books in inventory. They're going to do something with them, but I really don't know exactly what they're going to do with them. But they're going to no longer be selling any Options Playbook on Amazon.com anymore. And it's the really kind of a funny thing about the playbook, to go back and give you a little bit of history, is that, they never, ever really wanted to sell. We're not in the book selling business, right? When I was at Ally and Trade King, it was all about just trying to generate, just educationally bring in smarter and better clients, which the playbook website and book has done. It was I don't know if it's obvious, but it was one of our best marketing pieces that we ever put together, in the life of Trade King for sure. And then it continued on with Ally. But with that said, we were easily selling 200 to 300 books a month continuously for over 15 years. So I thank all of Options Playbook Radio fans out there for that. And it's amazing that it's had the staying power that it's had. And once again, excited about the next steps that we're going to be making in that space.
All right, exciting stuff there. Let's keep on rolling. Let's go out to Andrew. Andrew has a question, not the rock lobster we're all familiar with here on the network, unless he's sending in questions for OPR as well. He wants to know, are you surprised that options trading has held up into 2023 while small lot options trading at platforms like Robinhood has shriveled up? And yeah, you're right, Robinhood kind of missed their numbers on their most recent announcement, so not a good period for them, even though they think they did reduce some of their losses out there. So I guess it kind of is a bit of a glass half full, a glass half empty kind of thing. Either way, their stock is still pretty much down, even though it has rebounded from the low around earnings, I believe, of a little bit shy of $8. Looks like it's a little bit north of $8 right now, 8 1/3, even though it's selling off again today. So yeah, it's kind of been a bit of a mixed bag out there on the Robinhood front. They are blaming a dwindling trading activity. But you're right. On the flip side, what we talk about all the time here on the network, the options numbers looking pretty robust. In case you missed it, listeners, the numbers most recent coming out of our friends over there at OCC, the Options Clearing Corp, were for the month of October. And yeah, spoiler alert, it was another banger, listeners. 988.3 million. That 1 billion contract per month level has kind of become a new barometer, which is insane. Just to say that out loud, we expect now 1 billion contracts a month, but that's kind of what we've hit. We've hit that twice now this year, March, and I'm blanking on the other month. So that would put October at probably number 3 overall for all time. So that's nothing to sneeze at. Threatening 1 billion contracts in October. Some highlights here really quickly. Equity options actually taking a bit of a break, off 9.1%. ETF options up 25.6%. Index options up 32.5%. A lot of that on the back of the zero-day options explosion. So that's really one of the key contributors. You're asking why it is. Some of these new products like zero-day really starting to catch fire with people. That is helping to drive a lot of volume. But even VIX futures were up 48.6% in October compared to October a year ago. So Brian, it's across the board. It seems like in the option space, it's kind of been a winner, even if, as Andrew points out, some of the smaller stock traders are maybe starting to curtail their business. What are your thoughts? You were a broker guy for a long time. What were your thoughts on this continued volume resurgence we've seen in the options market post-pandemic?
All right, so I'll start by answering a little bit on Robinhood, and then I'll get into the options. One of the big things, like with the small lot traders, I'm thankful for Robinhood for changing some of the ways that a lot of brokers do business. There was a huge segment of the population that really wasn't being represented, and the fact they perfected, I guess would be the word, buying fractional shares and allowing people to just slowly get into the marketplace and put a toehold in. I think that was good. And you saw a lot, like even Charles Schwab nowadays offers fractional shares, and it just makes it interesting for even young investors, teenagers, to come on in, open up a custodial account, and be able to dip their toe in the markets. Now, one of the things about that, though, is that they offered that technology, but not a lot of support to go with it. So what has happened, in the good times, when people are making money and the markets are rocking and rolling, those companies are going to do well. But I always like to say, the Warren Buffett quote that nobody knows who's swimming naked until the tide goes out. So in tough times, those accounts don't do well. They have a tendency to go away. They are very high maintenance accounts. They have a lot of questions like, where did my $10,000 go? That type of thing, by buying speculative stocks. And those clients, in general, a lot of brokerage firms would snub their nose at. They would charge fees. Like if you hadn't traded for a year, you're going to get a fee for the fact that you haven't traded. And they try to push those people away. Or those investors, I should say. So Robinhood gave them a place to go. So I would like to see them survive. They dipped their toes in the option trading world, but then they had some bad news with that situation. I think it really comes down to the fact that Robinhood was trying to do a lot of things without providing the support behind them. And I think that's why their numbers are struggling. They need to build up that piece and provide the support along with the technology in order for them to continue on. But even if they go out and try to partner with somebody, the accounts in general are not as valuable. Not a lot of them trade options, like you say, a lot of small lots, a lot of speculative. So that kind of hurts. And they saw it in their numbers this quarter around. Now, option trading, I expect that. It makes sense to have that in your toolbox. The more and more liquid the options marketplace gets, the better. You're just going to see option trading explode. So the big thing is trying to keep the liquidity there. And Mark, we've talked about, we get zero DTE questions all the time. And that's the one thing that it kind of bothers me, is that we're offering so many products that it can hurt the bottom line as far as the liquidity, because that's the real struggle in the options world. Is if you're trading something that's not as popular of a stock, is the executing on the bid and the ask can be a high percentage of your overall trade. And I mentioned this a lot with the fig leaf strategy, which is one of my favorite strategies inside the Options Playbook, the fig leaf, which is also known as the leveraged covered call. But with that said, if we had real tight markets on those deep in the money option contracts, man, it would be really hard for me to make an argument as to why I need to buy stock. I would really like to trade those options, but the biggest battle there is just the liquidity of those option contracts and the width, which leads to the wide bid-ask spreads. So there's a lot. Yeah, that was a great question, Andrew. It's probably Rock Lobster. He's probably just making up a fake name out there. That would be like him to do something like that.
To just chime in out there. Yeah, that would be That would be something. So you're all in on the money calls these days. That's your go-to now. I like
Well, I'm going to try it, because I have the freedom, so I can share some of that stuff now. So and I'm being blunt, I personally have never just opened up an account and only traded deep in the money option contracts. So I'm going to try to deal with some of those headaches. And I was really bearish on the market, especially through September and October. And I mentioned that on a lot of my webinars that I'd like to get bullish going into the end of this year. And this is one way that I want to try doing it. So I'm going to set up a paper trading account, and I'm going to try to manage it, and I'll be rolling calls quite a bit and selling calls against these deep in the money option contracts on right now. I'm looking at about 5 stocks. I have 4 that I've already purchased, and then we're going to go from there.
All right, fascinating stuff. Let's keep the ball rolling out here. Let's go to this next one. This has kind of become an interesting issue since we started talking about it. Well, we touched on it on Options Bootcamp a month or 2 ago, but very briefly. Then we kind of got dragged back up on Monday, and it's kind of become an interesting thing. Looks like Insta34 wants your thoughts. He has a question/comment about this, Brian. He says, is Brian aware of this new enforcement protocol? Interesting way to put it. Enforcement protocol for pattern day trading, or was this the policy when he was working at Ally as well? And you know what, Brian, I could sum it up for you, but we just had a clip that we just played for our Options Bootcamp a little while ago. You know, let me see if I can grab that for you, and then I'll let Scott Sheridan, the CEO over there at Tasty Trade, he was explaining it on Monday. He's knee deep on this. I'll let him explain it to you in his own words. Let's see if we can dig that up.
And the rule, as it used to stand, depending on the clearing firm where you were trading, they either gave you one reset a year or one every 90 days. So a reset would mean if you made more than 3 day trades in a rolling 5 business day period. So if you made 4 is the same as 1,000. It doesn't make a difference. If you violate, you violate. You would need to you are in what's called an equity maintenance call, an EM call, and you would need to ask your clearing firm for a reset. If you have one, they give it to you and you're good to go the next day. About a year ago, FINRA changed the rule. Again, they're saying they didn't change the interpretation. The rule now is that you get one violation in the life of your account. Let me say that again. You get one violation, and then if you do it again, you get a warning, you get a violation, and you're done. So what that means is if you are a Tasty Trade customer, if you're a Schwab customer, a Fidelity customer, it doesn't matter where you're trading. If you are under $25,000 and you make more than 3 day trades in a rolling 5 business day period, you get a warning. You can get a reset. If you ever do that again while you're at that firm, you're done for the rest of your life.
That was kind of surprising to me. We had just talked about this not too long ago, and the prevailing wisdom out there from a lot of our listeners was that's not that big of a deal. You could use some techniques like E-mini and others to kind of do an end run around it. If you do get flagged, it's 90 days at the end of the day, then it resets and you can kind of go back about your business. What Scott was saying is that is no longer the case, and that is a fairly recent interpretation from FINRA. They're now kind of cracking down a lot harder. It sounds like it's pretty much one strike and you're out. This has been the case, I guess, for pretty much the better part of the last year, Brian. So were you aware of this over there at your last days at Ally, or is this kind of a surprise to you as well?
It's a surprise. I'll be blunt. Yeah, I haven't kept up with those type of rules, but just in general, understanding the understanding of how you would violate, because a lot of people that violate don't even know that they did it, that they tripped the landmine. And that's the thing that I think is the scariest part of all of it, is that a lot of people can avoid it once they learn about it, but there's no speed limit sign that is hanging on, the brokerage firm website saying, hey, you better not sell this or you're going to be in violation. And so, yeah, that's a scary thing. And it's not a good thing. You can go to another brokerage firm. I don't think that there's any limitations if I'm done with Fidelity because they've basically said I violated it, can I leave and go to another brokerage firm? So I guess that would be one of the hitches that would be in it. I've seen that happen before, honestly. And so that you start anew at a new brokerage firm. But man, that just seems silly to me to have to transfer your account just so that you can actually trade stocks again, the way that you would like, the longer term holds. And, if you want to be a pattern day trader, you're a pattern day trader. So I take it from this, if you violate it, you can still meet the equity requirements and still be a pattern day trader, right? I mean, your account just doesn't switch.
Yeah, you can bring it to another firm. I assume. Right. That would be crazy if they just banned you altogether from the market for life. Right. You're out. You're done. You can never trade again.
Well, I mean, you'd be a pattern day. You'd be labeled a pattern day trader across it'd be like being labeled a leper back in the day, right? If you go to this other brokerage firm, it follows you. I don't think that happens. But with that said, I think it's, so many people, that first violation, they don't even know that they got that violation. I've seen that for my entire life at these brokerage firms. So I'm not happy about it. The brokerage firms have some power, and I've seen, like, even if you read the letter of the laws by FINRA, ideally even a butterfly, if you read how FINRA defines a butterfly, it's saying that if it's not a butterfly, like literally a 5 by 1 by 2 by 1, and it's 5 points wide between the strikes, it's not, you don't get the margin benefit. That's literally how they've written the rules. And they tried to enforce that for a minute, and the brokerage firms came back and pushed up against it. So this is big enough that I do think that you will see some pushback from the brokers. And I would not be surprised it's going to take a while, but within a year or so that you see this rule go back to the way it was. That would not surprise me at all.
Well, sounds optimistic. Let's hope so, because you're right. This goes back to our earlier question with the smaller accounts. This is definitely targeting those people. It's people with under 25,000 in their accounts. So those people don't need any more onerous things put on them. So let's hope this draconian enforcement is a short-term thing. Speaking of short-term, this show is not short-term, Brian. We've already been going on for 30 minutes. We're having fun here, but let's squeeze in a couple more, because we haven't been doing it in a while. The people have been waiting so patiently, Brian. Let's go out to Paul Kranick. He wants to know, what does Brian prefer to trade, VIX calls and call spreads, or VIX puts and put spreads? Brian, are you going light side or dark side, upside or downside when you're going out in VIX land?
I'm going to say both. And I recently on a webinar was with Russell Rhodes, and he's the godfather of the VIX, at least the VIX books. At least I don't think there's anybody who's written as many books on the VIX as Russell. But I love the concept of selling a put spread to buy an out of the money call. That's another strategy. And I told him that. I said, Russell, when we were writing the playbook and we came up with the term the fig leaf, and it's obvious it's taken off a little bit. If you Google it nowadays, you'll see fig leaf option strategy that it is really now the name of that strategy. I'm like, you need to name this strategy. I think, because I don't know what I call that. You sell a put to buy an out of the money call. So I like to do that. I like to put the line on the sand below, sell, bring in some credit, and use it to buy some out of the money calls. So if I'm really like, that strategy to me would have been very solid going into the November 17th date, when seeing the VIX, where the VIX was trading, knowing that there was a chance that the government might not kick the can down the road with the appropriations. Then that, to me, that's a great trade, because if they don't do anything, the VIX stays where it's at. And if anything, it might drop a little bit. But then if they do something, or if they don't kick the can down the road, well, then who knows what's going to happen. And you can see that VIX skyrocket. So that's my favorite trade overall. But in general, I'd rather do spreads if I'm just doing a one-off trade in the VIX index. I'd rather do spreads than buy individual options outright.
All right. So you like bullish risk reversals in the VIX. That's your sell put.
Is that what you would call that? A bullish risk reversal?
Yeah, sure.
That's what
I like that.
That's trade. What your name would be for that strategy. Selling the put to buy the call?
Yeah. That's what we used to call it back on the floor way back in the day. So yeah, it's a popular strategy. I do it more in indexes than I do in VIX, because you don't get often a ton for the VIX puts. But it's definitely one we have seen applied out there in VIX land before, listeners. So there you go, Paul. His answer is both. He's getting very political, Brian. He wants a little bit of both, a little bit of column A.
That's true.
A little bit.
I'm trying to give situations where it might. I mean, I don't even right now, right around this 4,500 level. Just who knows where we're going to go next? It's it's a very. I still think the VIX is fairly low relative to what the marketplace is telling us.
Yeah. Well, let's see. VIX today closed right around the 14 handle. Yeah, 14, almost 14.20. So, yeah, it's kind of been flirting with that for a little while. My 14 half puts expiring today worked out pretty well, Mr. Brian. I'm happy with those.
Nice.
So I've been playing a little bit of dark side of late, but very near dated fun stuff. A lot of UVIX as well. We've regaled that. You and I talked about UVIX a couple of weeks ago on Options Oddities.
Yeah, we did.
I said at the time, I bet you this thing is going to melt down too quickly for me to take off that fly. And it pretty much did. It just imploded 16 handles in the span of a couple of days. Blew through everything, made it hard. I got it off, but at nowhere near the levels it could have been. If I had been had a little bit more time, I just got in, just closed that short leg. It would have been fun. But fun things.
Before you go, though, are we heading out here? Do you remember the long? I chatted with you just not that.
Oh, your straddle. Yeah, you had a small
of the long straddles.
Yeah, small cap straddle. Regale us with that really quickly.
Okay, so the last show that we were on, asked once again, like, what are you looking at? And it was just if you just pull up a Russell chart, Russell 2000 or the IWM. It's very obvious that there was a line in the sand with the Russell. It's been beaten up, underperformed almost all of the major indexes for quite some time. And it was just on a precipice. And we talked about if I were to do a long straddle, which we don't talk about hardly at all, first of all, just on Options Insider, but in general on Options Playbook Radio, there's only few and far between, but that would be a time. And obviously the Russell is killing it today. And 1,600, or I see right now it's 1,800. Wow, that's even higher than I thought it was. But I think it's up about 12% since that moment. And it was trading the long straddle was trading at about 5% of what the market was. So it was a no brainer. Well, in hindsight,
IWM popped nearly 5% just yesterday. I mean, it was ridiculous.
And that's what you paid for the straddle. I think it was like $9 for whatever I was looking at going out about a month.
We had a question
on paper, already removed the trade and talked about it on the show and everything. So that's when I like to do long straddles. I mean, just to sum that up is when I see something interesting on the chart. I don't think long straddles ever make sense to do ahead of an earnings report. I don't really want to do that trade because all the battles with implied volatility. If it's a known event, that's not when I want to do a long straddle. I want to do it when I think the marketplace can get surprised.
We were just talking about that on our Options Bootcamp show today. Someone asked, when do you like to do long straddles? And I said pretty much that scenario. And the S&P or the index or whatever you're trading is whipping 5%. Yeah, that's a good time to have a long straddle in your back pocket. Outside of that, probably not. Probably death by 1,000 cuts. But yeah, that's 5% in small caps. Small caps have been a crazy beast to watch. It's all been crazy, but small caps, a very special breed of crazy over the last few weeks. Let's get out of here.
Really have.
Yeah.
And it's so great to see them bounce back because if anything, that's one of the bigger bullish signs that, you can point to a couple of things. The 10-year is what I think everybody's looking at, the interest rate. But just to see the Russell making some headway is a real good sign for the economy in general.
Got to hear on this one. Kind of an interesting one. You are uniquely suited to discuss this one because you are not in Chicago, Brian. Brendan wants to know, is Chicago still the place to go if you want to make a career in options? And, of course, back in the day when I came out here, the answer was a resounding yes. This is where you came if you wanted to be a market maker or a broker or any sort of really options-specific career path. All the exchanges were here. All the volume was here. All the infrastructure, all the know-how, all the capital. It was all here. You had a little bit in New York. You had a little bit in San Fran, a little bit in Philly, and, of course, smattering in London and a few other places. But really, the lion's share of the volume and everything was all here. But that has changed a wee bit in the year 2023, Brian. You're a good example of that. You're making a career in these options things, and you are nowhere near Chi-Town. So what do you have to say here for Brendan, who wants to know, is Chicago still the place to go if you want to make a career in options?
Well, in general, I would say yes, without a doubt. And I did, I'm now living close to Charlotte, just outside of Charlotte, North Carolina. And I spent the bulk of my younger days learning about options in Chicago. Worked for the Chicago Board Option Exchange, which is now CBOE Global Markets for many years. So I still think that is the place to go. But one of the things a lot of people don't understand, or that may not know, is that Charlotte is actually the bigger financial hub than Chicago when it comes to big banks. Relative to the population, Charlotte actually, from my understanding, has more of those headquarters in Charlotte than Chicago. So on a financial career, Charlotte is a very good place. And that was part of the reason we made that decision when we were Trade King and we started that company. I guess it's about 18 years ago, maybe 19 years ago now. And when we started the company, we started in Florida, mainly because the CEO at that time lived in Florida. And we really struggled trying to find people to answer phone calls and talk about the markets. So when we got big enough to expand, Charlotte was a no-brainer for us. It was within driving distance of where we were in Florida, in the Fort Lauderdale area. And and we have not had hardly any struggles with finding workers in Charlotte to answer calls and give customer service. So that's a little bit of a side note. It's not as heavy in the options trading world, but it is in the financial districts.
This episode of OPR brought to you by the Charlotte Board of Tourism, listeners. Get down there. Check out Charlotte for yourself. A wonderful place to be, Brian.
Oh, did I forget to tell you that I'm now the mayor of Charlotte?
Oh, yes.
I didn't throw that in there?
You are at the least the director of their Board of Tourism, sir. Well done. You did a good job evangelizing your new hometown. But yeah, Brendan, I think in a vacuum, it's still a great place to come. And it kind of depends what you want to do, obviously, as well. But as Brian points out, now that everything has gone electronic, the old standby was, can you run a hedge fund from a beach in Tahiti? The answer now is yes, you can, with just a phone, pretty much. So yeah, you can do a lot of things now that you couldn't do back then with the gift of technology. So if that's you, then it might depends what you want to do. You don't say here, but depending on that, you can make headway in other places, even though Chicago's still the mecca, at least for the time being. Brian, that music means we've come to the close of your first episode of OPR in quite some time. How was it? Was it like riding a bike? Did you never forget, sir?
Shh, I'm trying to listen to the music, Mark.
It is very fun, isn't it?
No, it's great to hear that music. So, no, it was fun, as always, and it felt good to get all that off my chest. I've kind of been in that silent period for quite some time, so it's good to get out and let everybody know what's going on.
There you go. And remind them again, Brian, in the meantime, in between episodes of this show, which are probably going to be sporadic for the time being as we get things worked out. But in the meantime, if folks want to check out what you got cooking, where should they go? What should they do, sir?
Well, I'm going to start updating more on X, or formerly known as Twitter. My handle is at Brian Overby. That's simple. That'll probably where I'll be releasing a lot of information about what's to come up next with optionsplaybook.com and the actual book. We just released the Kindle actually today, so the new Kindle version is out and available. And follow me on X.
There you go. Follow him on the old X. I have to say, Brian, it was fun doing a little bit of OPR. I like hearing that music again too. It's fun. It's got a certain je ne sais quoi that is all its own. No other song on the network, no other theme sounds quite like this one. So it's a fun one. Hopefully you enjoyed it, all you out there who've been asking us, where's OPR? Where's OPR? There you go. You got a little bit of a taste of it in your back pocket. Hopefully that holds you over for a little bit. We'll be working on some more cool stuff, so stay tuned for that. In the meantime, of course, you got the full network to slake your thirst when it comes to all things options education and options trading. And of course, if you want to go above and beyond, you can always join us on the pro side there. Brian's been making some appearances there of late, so you can catch Brian maybe more frequently on the pro side of late than even on OPR. The place to go to find that, of course, theoptionsinsider.com/pro. Back again tomorrow for our double dose, double dose of the option block and This Week in Futures Options. Friday, of course, volatility views. Then back again for our pro folks for options oddities. Then we're back again sometime soon, another episode of the Options Playbook. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.